All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm sorry about being a little bit delayed here in getting on video here. I've never been accused of being the most tech savvy individual, and yeah, when Jason saw the issue, he just kind of laughed at me because, well, it had nothing to do with the technology, rather the person using the technology, which is typically the case. And yeah, so on we go, But my apologies. All right, market down about 40 points here this morning, and or here today, and it's a larger move on the downside than the market has seen in quite some time, and it is something where the volatility index is, it started pricing in a smaller move than this on a day-to-day basis. So this is a little bit of an outsized move, and one that comes with a catalyst. And we saw last week the two catalysts that kind of pushed things higher that were not earnings related, right? We also had some earnings related pushing higher. But, we had this kind of Thursday, Friday rally here where the market went up from about 2,600 to 2,677 and really rallied on this trade war news. And I even got on video and talked about how it wasn't even news. It was stuff that had happened weeks ago. It wasn't anything that was overly relevant to what was even going on or happening, but it did provide some boost to the market. And then here over this 3-day weekend, we get options expiration on Friday, and options expiration can be a very pivotal day. A lot of times we can see short-term tops and bottoms created on that day. And then we get the IMF last night that basically comes out and lowers their growth prospects for the world for 2019. And there's kind of fear that, hey, growth isn't going to happen to the same degree as was expected. We also saw Chinese GDP, which was at its lowest level since 1990. Now, it's at 6%. Right? You say, well, 6%, the U.S. would kill for 6% growth. And yes, if the U.S. had 6% growth, the Fed would raise rates up, 10%, something, crazy like that. But it's one of those where 6% is the lowest that China has had since 1990, which is pretty incredible when you think about it. But it sparked those fears of, hey, you know what? There's some global, there's some more global slowdown in the mix here this year. And so that element of, hey, you know what, does the world have economic growth, or does it not have economic growth here in 2019? Continues to weigh on the markets, continues to be the big question for the markets, and will likely continue to be a big question for the market. Now, we did here just recently have some news that the U.S. has canceled some of the face-to-face talks here with China this week, as some progress has not been made with trade talks, and so that has been released, and that is also weighing here a little bit on equities. In fact, the last move lower here, if I come to a 1-minute chart, this last move lower right here corresponds to that news coming out and being released. And so that's what that dip is. That's what this dip here is about. We saw, about 18,000 volume. I don't know that it's enough to call bottoming volume here for the day. Well, it's not enough for me to call it bottoming volume for the day, but it is something that has to be looked at and said, okay, you know what, we might be in for just a little more rally here today, a little bit of snapback here, for the rest of the day. But anyway, that's kind of what's going on. And if we come in and we look at some charts and different things, and I know when I use the word pullback, the next question is, do we go retest the lows? Do we go retest the lows? Do we go retest the lows? And I'm not even going to speak to it, because the reality of it is these lows are so far away. These are 15% away, right? 15% away. There's no technical tool that I can apply here to the market to say, well, yeah, of course we're coming back and retesting these lows. It doesn't make much sense. It doesn't really, it doesn't really jive. There's no real rational element there. The reality is that the trade war gets worse and nothing is resolved, we're coming back to these lows. It doesn't care what the chart says. But if that's the ultimate destination of trade talks where, you know what, it ends badly and more tariffs are added, then, yeah, we're coming back to the lows and we're probably breaking them. That's what it would take, right? That's what it would take right now. Is the news out there today enough to send the market to new lows? No, it's not, right? Global slowdown, and if we slow down by X percentage, is it enough to create a pullback, a normal pullback, and then some sort of higher low? Yeah, it is, right? So, to me, this question of do we go and retest the lows, this possibility of retesting the lows, yeah, it definitely could happen, but we know what it's going to take. And it's not going to be a charting thing. It's not going to be a technical thing. Heck, it's not even going to be a fundamental thing if that happens. It's going to be a total fear, chaos type of event that would, drive it down. And I would suspect that if we do get down to these lows and retest these lows, the fears are going to be significantly greater than what they were in December. That's what it would take, to get down there, after, everything that we have seen here. But in the context of today's pullback has not even pulled the market back to its 7-day moving average. Now you think about that. Market's down 40 points on the S&P, and it's not even back to its 7-day moving average, right? Last week on Thursday and Friday, I discussed that personally I pulled a lot of long-term money off the table. I had lowered my long exposure by one of the biggest, by one of the biggest that I have in a long time, right? And it's not something that I'm jumping and throwing it all back on today and saying, oh, we got a pullback, let me just throw it all back on. No, it is something where I look and I go, okay, here we are. All right, what can this pullback be, right? What are the possibilities? What could happen, right? And it's one of those where if we just come into the market and we just slap on a very simple retracement, right? And we just simply retrace this last sell-off, we can see that the market overshot this retracement on that news last week, right? The market overshot it. It had the news event. It had the, where it had the, the talk of, the trade talks and everything else, and overshot, right? It overshot the traditional retracement. But we've come into this traditional retracement area, and an area that I'd be very surprised if it doesn't act as some sort of resistance for at least consolidation. The second thing is, if we look and we retrace the rally that has been, a retracement of this rally means the market still has significantly further to fall, at least 80 points on the S&P to fall, right? Just to get into normalized retracement areas, just to get to normal, right? And yeah, we can always bet on abnormal happening, right? That's always fun to do, but when we look at the markets and, you really think about trading and analyzing and putting things together, you're looking at what the normal is, not what the abnormal is. And the abnormal happens every once in a while. Great, you deal with it, but, the normal is called normal because that's typically what will happen, okay? So it is one of those things where, the S&P is giving this pullback, and it is pushing on back, but it is still nowhere near what would be its typical retracement levels here. Okay, so we have this kind of sell-off brewing, this sell-off happening. How do you trade it, right? Is there some good risk? Are there some good risk-reward scenarios here? And if so, where and how? Well, let me show you some of the things I'm looking at. And this morning I looked at the gap down on the open. I thought, man, you know what? Do I buy this gap down and Do I buy some puts on this gap down? I decided to let it play out just a little bit here till closer to the end of the day. I may regret that, but some things like a BHP Billiton high on my radar to go in short. And to buy some puts. Now, with this, I'd be buying some February puts. I'd give myself some time because this is something where, all right, we have seen this stock in this nice little consolidation area, between 42 and 48. Gaps on down here today, breaking the lows of the last 2 weeks, right? Really breaking the lows from a lot of different days. And, typically this type of move for BHP, signals, hey, you know what, the next trend is down, and, look to take advantage of that. Now, anytime BHP has a gap down, we can always see a gap up a day or two and trade up a little, trade down a little, before the selling. You can kind of see how choppy it can be, but BHP is high on my radar there. To be involved in some puts on it, and the 46s were going for about $1 a little bit earlier when the stock was down about $1.40. Let's see if we can get them somewhere around that area a little bit later today. Another one's JP Morgan, and you say, well, Jeff, JP Morgan, you talked about the bank earnings and how cheap the banks were and all of that last week, and I did, right? And I'm not really interested in shorting Bank of America, right? Could it pull back? Sure. But I think the Bank of America earnings are a reset for the stock where, its chances of coming back down to these levels that it saw pre-earnings, very slim. It will take a total market meltdown for that to happen. But for a JP Morgan to go and at least revisit sub 100, it's not going to take nearly as much. It's not going to take nearly as much there, after that earnings report. And you can kind of see this kind of island candle from yesterday. And, you see the gap down, and, to see this come back and push into the $100 to $99 level would not be a huge surprise. You also notice what's going on with the 30-year or with the 20-year bonds, right? Bonds are up. What's going to happen when bonds are up? Banks are going to go down. That is going to be the correlation. And we talked about it last week. That is going to be a very strong correlation as we go forward here. And so TLT is definitely one of those that. Definitely one of those that does look like it's due for a little bit of a bounce. More importantly, you think about the catalyst that we see here of global growth slowing and what's going to have to adjust to it. Bonds a little bit. Okay, does that mean a little bit of downside for JP Morgan? I suspect so. So those two on my radar. And then some of the stuff that we saw on on Friday that I said, hey, you know what? These would be very interesting buys on some pullbacks today, right? Here's Micron. Really nice day on Friday, right? But again, it's OPEX. I have to take it with a grain of salt. I can't go chase into something on an OPEX day. It just traditionally doesn't make much sense. We get the gap down today. It's continued to sell. It's breaking below Friday's lows. For me, that says, hey, you know what? The bullish element that we saw on Friday, I have to kind of step away from and not really take a look at it so closely. Western Digital, a little bit. It's not breaking the lows, but it also does have earnings upcoming with that earnings risk. But Western Digital, very interesting. In fact, I think if you look at today's action as a single-day sell-off, single-day one-off type pullback, I think you look at Western Digital and go, okay, this is worth buying and let's go. There's a lot of put activity in Western Digital here of late. A lot of put activity ahead of the earnings. And a lot of times when we see strong put activity ahead of the earnings, the stock tends to get bought up after the earnings. But that is just a tendency, not a every time type of a thing. MLM. Martin Marietta, Vulcan Materials. Now, both of these opened and sold off. And I was watching them on the open. The options never came into a spot where I could really trade them. But you can see Vulcan open and sell, and get bought back up fairly quickly. Again, not really doing what the market's doing. which is a strong characteristic of these two stocks, but they do tend to trade together. But both of them holding up in a very nice way. In fact, in a way that makes me even more bullish than I was on Friday with the overall price action in these two names. But interestingly enough, Masco, which had similar action, is not held up to the same degree. In fact, Masco, if I show it here on the minute chart, you can see sold off and is pretty much stayed at these lows without so much as even a small bounce here. Yeah, I guess 30 cents. A little bit of bounce associated there with them. So anyway, that's where they said I haven't jumped into any of them here, just yet to get involved with. Some of the others like an Estee Lauder that had some interesting action Friday, getting erased. A CF, their Friday action getting erased in a big way. In fact, let me show you CF here. You could just see how quickly some of this is getting erased after, what was a pretty decent move post OPEX, and even had the 3-7 crossovers, and even had some of those trend indications there associated with them. The last three, Procter & Gamble, which talked about, okay, is it ready to kind of break out here to the upside? What's it doing? It's breaking down. It is breaking down here. This is one that is very interesting on the short side with this breakdown of the consolidation. And it's one that does report earnings here, I believe tomorrow morning. So definitely one that, hey, you're involved in earnings if you're buying it. Coca-Cola has earnings here soon. It's not quite doing the same thing as Procter. Clorox is kind of very similar to Procter, right? But definitely have the earnings factors to contend with those stocks. We do see the VXX bouncing, taking a substantial leg up here, here today. It is something where I'm looking at possibly putting a trade on in the VXX. But when it comes to the VXX, have to keep in mind that this product is going out of use. And so, the last options you can see that it has, they expire here on Friday, and that's it. They're done. VXX is done, and it will now be VXXX or VXXB, right? VXXB, which does have a lot more of the options associated here with it, but the spreads aren't as good. The trading activity hasn't caught up here to it yet, so the spreads aren't that good. The open interest isn't as good here with them, so that's going to take a little bit of time, for the trading activity to really catch up there to it. I could go and look at something like a UVXY or another type of volatility product here. You can see UVXY is up huge today. Just monster move here for it. But here, I'll show it to you. UVXY. Here we go. About a $5 move here to it, but you can see how much UVXY has been moving here of late since they did the reverse split. It has definitely had a lot of movement associated here with it, but to see this thing snap back up into the $70 area, $75 area, I think would be a little more akin to normal than abnormal here. With it. So, those are some of the things that I'm looking at. We see oil down about $1.40 here today and making a substantial pullback, obviously, on the, global growth concerns, right? Oil, nice little kind of bump up higher on Friday, then coming back into this recent consolidation zone. I think it's an area that has to be watched out for a false breakout. And with a lot of things, we saw them have these little breakouts on OPEX Friday, and basically get turned around the next trading day. That is a pretty good sign that it is a possible false breakout. We have a lot of that out there. Now we have a lot of that out there in the market, in the markets here today. So anyway, those are some of the things that I'm looking at here. We have IBM earnings after the bell. We'll have kind of earnings happening here for the next 6 weeks. We're not going to be able to get away from it. It is going to be an earnings deluge here that it's not the typical 3 weeks and go. It's going to be a good 8 to 10 weeks and pretty much take up the entire first quarter here this year. So have to be wary of that. It's one of those where the stocks on your watch list just have to be a little wary that, hey, you know what, they have earnings upcoming. There are many stocks out there. They've already reported. Don't really have to worry about it. Things like a Nike, which caught another upgrade here this morning, by the way. Is helping on with that. Under Armour also caught an upgrade here this morning. You can see them holding on here despite the market selling off moderately aggressively. Moderately aggressive here. Apple, this is a very interesting turn down here for Apple. And, Apple came back, has filled the gap, and starting to weaken after the gap fill. To see this come back and break down below 150, I would not be surprised to see that happen. Yes, Apple's an inexpensive stock at these levels, but it's not historically inexpensive yet. And, we talked about this last week in, it needing a base out period, and it still doesn't have a higher low to really suggest big upward trend coming. And so to see Apple lag, if you want to talk about stocks that have a better chance of retesting their lows, Apple's one of those, right? Apple has a much better chance of retesting the lows than the overall market, itself does. We're also seeing industrials who really outperformed, those kind of Thursday, Friday last week on the, I guess what it was called news. The news of what happened 2 weeks ago that had no relevance into what was happening today. Yes, it bounced on those, and it's getting hit pretty hard here. We're going to start seeing some of the earnings coming in from different industrials starting tomorrow. And then, last but not least, I think from a bullish standpoint, if you're looking at a company that's already reported, take a look at CSX. This is a pretty good report that, we saw the stock gap down and rally. It rallied pretty hard on Friday, pulling back just moderately a little bit here today. I don't know that there's a good risk-reward scenario, here associated with it, but, definitely one, I think, from a bullish standpoint, worth having a look out here for. So anyway, going into the close, I'll have my eye here on BHP, on JP Morgan puts, and we'll be looking to get into one of those. I have about 1,000 for the challenge, so I'm going to put the 1,000 into it, and and go, and will it be my last stand? No. If it's something that if we start to see some things change materially, and I can pull $600-700 out of it, I definitely will and put it elsewhere. But I do think the odds, when I look at the odds of a BHP, JP Morgan having downside follow through, they're very high. And so the options aren't too bad. The odds are very good, and the type of setup that I want with where I'm at with the challenge right here, right now. I'd love to see a little buyback rally into BHP into the close would be nice, but we'll see how that kind of shapes up here with it. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.